Sun Pharma is in focus today. Company came out with results yesterday wherein they beat estimates when it comes to EBITDA margins and net profit. To speak more about the numbers, I am here joined by Mr. Muralidharan, who is the CFO of the company. Welcome, Mr. Muralidharan.
Good morning.
Good morning. So revenue growth for the company was around 6%, but margins were around 29%, which did beat the estimates. Now, what is the outlook when it comes to, in terms of these numbers that you are seeing for, for FY25 and FY26?
So as far as the top line is concerned, while you're right, for the Q1 we grew about 6.3%, but all our businesses are well positioned for growth and we maintain our top line guidance for FY20 given earlier. However, we are not given any guidance when it comes to EBITDA margins. We will continue to invest in R&D to build a strong portfolio both in specialty and generics, and our SG&A expenses will also increase commensurate with the business.
Okay, so this EBITDA margin uptick was actually on the back of lower R&D expenses versus which was around 6%, which was while you had guided for around 8 to 10% of R&D expenses. Now, will this be step up in the consequent quarters given the timelines haven't really changed for the current pipeline?
See, the R&D expenses definitely will increase in the coming quarters. However, if you look at our EBITDA margins in the past 8 to 10 quarters, we have been able to maintain a particular level based on our focus on to bring in efficiency in overall business operations, and with the growth in our businesses, which are well positioned for gaining momentum as we move forward.
So, where can we see this EBITDA margin going forward? I mean, will this be sustained at 28-29%?
So I mentioned that we are not giving any guidance on EBITDA margins. What we are saying is that our business where we are focusing like global specialty, India business, emerging markets, and all other business have been positioned well for growth, and it should help us to gain the momentum and the resultant margins.
All right. Also in the US business, sequentially we have seen some kind of a decline. Now, is it fair to believe that entire part of the slippage which we have seen sequentially is led by seasonality?
Yeah, there are two factors. One, there's some element of seasonality in one of the specialty product level on which we mentioned yesterday somewhat in the last 2 quarters. However, our outlook on the specialty business remains very positive, and we expect these specialty products to continue to grow well, and doesn't seem to be any concern for growth at this point of time. The second factor, of course, we did mention yesterday that the lenalidomide sales in the US for the quarter was not very large, somewhat in line with Q4 of last year. And we have also stated in the past that the generic lenalidomide sales tends to be episodic and fluctuate from quarter to quarter. So this sequential decline, we will not read much into the decline as we look forward in the coming quarters.
Also on the US generic business, now Taro is part of the business. Now, how do you see this business growing?
No, Sun was already having a stake greater than 70% in Taro, and as we integrate both the organization to create a seamless organization, we do expect that these integration activities will take some time. In terms of top line or even overall margins, we do not see any significant impact in the near term.
Also, Mr. Muralidharan, we do have 3 units, which have been affected by regulatory issues. Now, is it possible to tell how much of your pending pipeline for the US is affected because of these issues, and are there any meaningful launches for the US generic market in the coming years?
So as far as critical launches are concerned, the near-term dependency on the sites are very low. However, this will continue to evolve with time. As far as the regulatory status is concerned, we are working on to address the issues at each of the sites. And in due course, after we have completed the remediation, in these facilities will be presented to the FDA for re-inspection.
And on the specialty side, so specialty business for, let's say for next 2 to 3 years, what are you planning over there in terms of volume growth or new product growth and product mix?
So we have shared our product pipeline, which are in different clinical trial stages, along with our PR yesterday. And if you look at our specialty sales in the last 4-5 years, almost more than doubled. And we are continuing to focus on gaining more prescriptions. And as the revenues are concerned, the outcome of the prescription and quality of prescriptions and generations, what we do.
Also, now your product Elexis V, which is for the hair loss treatment, now this new litigation which is set aside. Now, you mentioned that you intend to oppose the motion file, but your intent to bring this product into market. What are the your growth prospects in that, and any possibility that you are setting to settle this litigation?
So we have mentioned that we will, our intention is to rigorously oppose this motion. However, the decision of the elections will launch will be governed by the decision of the court on the motion of the preliminary injunction. Since the matter is registered with the court, we would not like to comment any further in terms of any launch timelines.
All right. And my last question to you is on the Halol plant with respect to FDA perspective, which we do have import alert since 2022. So what are your plans over there?
So we have been working constructively. We have taken the feedback of the FDA and made commitments to address the concerns in respect of Halol. We're working vigorously there to complete the remediation. As and when we're ready, we will inform the regulator for re-inspection.
All right. Well, thank you so much, Mr. Muralidharan, for answering our questions, and all the best.